Hello and welcome to another update video about FETCH.AI FET. Yeah, it was maybe a little bit dramatic in yesterday's video, but I highlighted to you, you need to be watching. It was a bit of an obvious one with that 20-day moving average, and I think it was a really good signal. Yeah, I did post that on for gold members on the Signals channel as well. We were here in the last video, and I highlighted to you that keep watching this 20-day moving average. Yeah, the Elliott waves don't really give us a very good visibility of the sub-wave count. Well, you know, I can interpret all sorts of structures into this, but it's very corrective. So it doesn't really give you an edge necessarily for trading, because you really want to be trading those impulsive waves here. You don't necessarily want to trade a correction unless you have some other method or tool that could give you a short-term advantage. And this was certainly something that I think hopefully helped you when you watched that last video, which was just on time, because we talked about last few times when the price hit the 20-day moving average that it reacted in a very bullish way. Yeah, so it bounced several times off the 20-day moving average, I think 4 times before, and it was a bit of an obvious one to come back again, and it touched it, and it did rally really. So it rallied now like whatever 17%, I think it was, as per TradingView. Here we can actually measure that. So yeah, around about 20% when it really touched perfectly. And not only that, I mean, I didn't actually talk about that in the video, but we had a descending wedge here as well. So you've got a potentially bullish pattern plus a 20-day moving average that where the price reacted already like 4 or 5 times before. So, you know, why not look at it, observe it, watch it, do it. Right? And sometimes you just need to pull the trigger. Either way, this is now working support, so we can now put the support against which the trend is up to 41.2 cents. That's probably also the level I would move my stop loss below if I was now in a long trade based on the 20-day moving average, or just put it slightly into profit, so that should the price come down, and the risk is still there because we're just moving into resistance here again, yeah, for a B wave. So if the price comes down, at least you get stopped out in profit. But to be honest, a 17% intraday profit is not too bad. Depending on your trading plan, you might want to take some partial profits already, because this was a really, really interesting one. You don't get 17%, 20% every day, right? Within 24 hours, not even 24 hours. I think it's been 12 hours or so since I've made that video. So yeah, hopefully that helped. I mean, this is clearly impulsive what's happening here at the moment, but then again, you have an overlap here, yeah, so a possible 1-2-1-2 setup, surely, but then it would all be most likely at the moment in the B wave. I did highlight to you that the count, yeah, if the Elliott wave count really is correct and this is a wave 2, I find it too short, you know, in terms of time-wise, you know, what happened here in terms of the correction. Ideally, I would like to see a more extensive correction for FET eventually, which doesn't mean you couldn't use those signals like that for trading, right? Of course, but again, if the count could also be, you know, this could be a wave 4, some sort of a wave 4. I find it unlikely because we pulled back too much for a wave 4 actually. So we actually, yeah, came just below the 61.8 fib level. So for me, the movement to the upside, also due to the choppiness, I mean, look at these overlaps here. Here, yeah, this looks very corrective, and from everything I see here, this looks very much like a 3-wave structure that would most likely eventually come down again. However, we still have short-term upside potential against 41.18 cents, and we haven't maxed out the resistance area. Now, this resistance area is based on fib levels, based on that move to the downside and the resistance. So here the 50% and the 78.6 retracement. Only really if it breaks above 55.8 cents, I would prefer that we're already in an impulse to the upside, possibly then already in a 3rd wave here. That would take us way higher, above $1, okay? But yeah, for now, I think that hopefully helped. So we are now back in an uptrend against the 20-day moving average here, against the 41.18 cent level. At the moment, the trend is up also in a very, very small time frame. And we now need to be watching how do we react to these Fibonacci retracements. So they are really the next resistances. So we've got here 48.6 and we're just above that. So likelihood would suggest that we are also going to test the 51.5 cent level now, the 61.8 retracement, and the 55.5 cent level possibly. If we break above the other one here, the 51.5 cents, then we probably test 55.5, which is the 78.6 FIB level. Only above that, in my opinion, a B wave gets less likely. Even though we could be doing some kind of a flat pattern, then it can even go higher to 70 cents, but then we take it level by level now. And I will keep you updated. Okay, that's my update about FET. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.